first and come back to the first part of the question. On the second part of the question, we're seeing 1.6T ramp across multiple customers. So we have multiple customers that are engaged in 1.6T, and we expect to ramp with multiple in parallel. And I would say that the other color I would add is that a number of customers are accelerating their time and their ramp on 1.6T, and we view that all as a good thing, right? We view that as positive. We have really proud of the lineup of 1.6T transceivers that we have. Just as a reminder, at OFC earlier this year, we were the only company that demonstrated 1.6T transceivers using 3 different technologies, silicon photonics, EML, and VCSEL. So I think we have a great product lineup. We have good customer position. We've seen acceleration of 1.6T, and we feel like we're certainly well positioned for that. I guess to the first part of your question, yeah, we feel really well positioned on 1.6T. I think as we enter the calendar 2026, we expect both on a year-over-year basis, we expect 800 gig will still grow on a year-over-year basis. We're seeing very strong demand on 800 gig. But on top of that, we expect 1.6T to ramp at a very healthy pace.
Great, thank you. And for my follow-up, I just wanted to ask about your progress on portfolio optimization and specifically pricing. So it seems like there's been a good amount of progress there in the last couple of quarters, but how much left is there in terms of these pricing tailwinds you can recognize, whether whether it's from the core datacom side or industrial, and maybe more specifically as well, just what are you seeing from a pricing perspective for transceivers? Just if you could talk about that environment.
Maybe I'll answer the last part of the question on transceivers, but I'll let Sherry also comment on pricing as it relates to gross margin. I would say on pricing of transceivers, pricing dynamic very much as we would expect. So I don't think we're seeing anything unexpected with respect to pricing. And then, of course, in a more supply-constrained market in general, that's certainly always a positive dynamic for pricing. And then, kind of in the first part of your question, just sort of pricing optimization in general and how it relates to gross margin, I'll ask Sherry to answer that part.
Sure. Thanks, Michael. So from a pricing optimization perspective, I was really pleased to see that during the quarter, part of the improvement in gross margin, the 70 basis points improvement sequentially and the 200 basis points year over year, part of that was due to pricing optimization. Pricing optimization in our, where we saw benefits in the industrial side of our business, as well as in the data center and communications part of our business. So pricing is an area where we tend to expect that the greater magnitude would come from the industrial part of our business. But we do see benefits, as well in the data center and communications part of our business. And pricing is really, pricing our products for the value they provide. And in the industrial part of our business, that's the part of our business where, in many cases, we are the only provider of those products. And so, our customers are certainly value the products that we provide to them and how we help them differentiate. So that's one key part of the improvement that we saw during the quarter. But the other part, just to round out the commentary on the gross margin, we also saw improvements from cost reductions, and so that was an area where we saw benefits in yield, which, if you recall, for the past so many quarters we've been talking about yield improvements. We continue to focus on that, and we saw those benefits in data center and the communications part of our business, as well as lower product input costs. So those are two main levers that we're really focused on to drive to our long-term target model of over 42%. So I was really pleased to see those results.
Thank you.
Operator, we'll take one more question.